All right, gang. So today we're taking a look at crude oil futures. We're looking at crude oil futures, and we're looking at the seasonality expectations. So you'll notice that we've got three lines here. The red line is the complete history of the contract, the data that we have going back to 1983. The yellow line is 20 years of data, and the blue line is 10 years of data. Now you can mix and match multiple combinations. You can see, 2-year segments. You can see define, 89 to 92 or 2011 to 2014. But I like to use the 10, the 20, and then the all year data. All right. And so that usually gives me a pretty clean and smooth look at the areas on a chart for the entire year where I can find defined cycle highs and cycle lows. And now this is a seasonal pattern I've traded for several years, and we've been talking about it for several weeks, and really looking for a buy opportunity here in the mid to late December timeframe. And notice that we do get a boost here at the end of the year, kind of tapers off a little bit, and then we get a boost here into about March, where this is showing us that this would be a wise spot on in time to maybe be tightening stops or taking profits. Look for new opportunities maybe in, say, mid to late April. Now, we are in the midst of a very bullish period of the year, but the most bullish here is actually, or one of the most bullish here starts around right here in the beginning of February. Now, this is also true with metals as well, but February is the most bullish month of the year for energy markets. And we're talking crude oil, we're talking Brent crude, heating oil, RBOB unleaded gas, and the like. And there's a couple different patterns here inside of crude oil. We're focused on crude. That's the most liquid. That's the most traded and watched market as opposed to some of the others. But you can consider all those. We follow those as well. But if you go and look at the chart, okay, we've been talking about this. So we were talking about this in December, really from, we've been talking about it since we've been in this zone here, but really this was kind of like the main area here, that last week or two of the year. And so we had the pattern here, and we were advising, our students and clients to begin positioning themselves to the long side. And there's no right or wrong way. I like futures and futures options, but we could be doing this with USO, XLE, OIH. Apologize for the writing there, but we did get that boost and that move higher. Okay, you see TPI also in line, and this is telling us exactly where we should look to. Hey, take some profits, maybe tighten stops, and then you're getting reversal signals right now. You're pushing into multiple daily, weekly tighten supply. You're getting bearish divergence signals, and you have a 3S code sell that is about 80% to its profit objective. So when we consider going back to this data, you can say, hey, look, the beginning of February is the most bullish time of the year for markets. We need price to align with time. So this is what I call time. We need price to align. So if this was the first 2 or 3, 4, 5 days of February and price was sitting here, and we knew that those averages behind it go higher or tick higher, I still would not be a buyer. I'd be a very cautious buyer. If anything, I can't make a decision here being at these higher time frame tighten levels. I would be waiting for a price to push back, and hopefully it does do that for us so we can get long in February for the next ramp up. Or I would be going to the lower time frames and looking for some type of entry setup on the lower time frames. But it's very important for price and time to align together, not just using one by itself. Okay, so if we were trying to buy here, these are very low odd trades. Why would you be buying into basically a brick wall here? So let's let price try and come to us. If prices do decide to reverse and rip higher, that's a trade that you can take. You make your own decisions there. That's a trade that I will avoid, and I'm okay being on the sidelines because I'll be looking at other markets.